In 16.2, we're being asked to prepare a statement of stockholders' equity. This is a whole new type of financial statement that just lists all of the shares of stock that are outstanding and what the balance of retained earnings is for a company. So on page 485 in the textbook, it says prepare a statement of stockholders' equity for the current year. As of January 1st, Superior Corporation had issued 8,000 shares of capital stock with a par value of $10 per share. During the fiscal period, the corporation issued 200 additional shares of capital stock. So like anything, we're going to start off with our heading. We are Superior Corporation. We are preparing a statement of stockholders' equity. And a statement of stockholders' equity shows a period of time, just like our income statement did. So we'll write for year ended December 31st, 2018. Okay, a statement of stockholders' equity has two main sections. The first one is capital stock. All right, and the value of this company's capital stock is $10 par value. And on January 1st, there were 8,000 shares issued. So when we multiply 8,000 shares times $10, we're going to get $80,000, and we put that in the middle column. Next, we're going to write issued during current year. And the problem says 250 shares. So 250 times $10 is 2,500. We're going to add those together and get 82,500. And we are going to call this the balance on December 31st, 8,250 shares issued. That takes care of our very first section. We're now going to move to our next section, and that's retained earnings. Okay, retained earnings, we're going to start off with our balance on January 1st. This is going to come from the adjusted trial balance, and that amount is $15,283.40. Then to that, we're going to add net income after federal income tax, and that is going to come directly from our income statement down at the bottom. So I'm going to write in the first column $73,148.80. We're going to subtract from that our dividends declared. This is in the adjusted trial balance, and that amount is $12,000. So we subtract these two amounts, and we put it in the middle column of $61,148.80. We're going to call this net increase during the current year, or 2018. What we're now going to do is take our balance on January 1st. We're going to add our increase from 2018, and we get $76,432.20. This is our balance then on December 31st. So now what I'm going to do is I'm going to take my balance up here, I'm going to add it to my balance of retained earnings, and I get $158,932, and we are going to call this total stockholders' equity. As of December 31st, and we will double rule under both columns.